So we are starting this particular webinar now. So during the webinar, everybody would be only in a listen only mode, which means you can only hear what the speaker is saying. At the end of the webinar, we'll be opening this panel for any question and answer. So if you guys have any questions, we suggest that you note down those questions and we'll be more than happy to answer those questions. We'll be taking all kind of questions. Let's say if you have a question of what direction the gold, silver or any commodity would be, we'll be helping you out with live charts. Any other queries? So do shoot as many questions you have and we'll be more than happy to answer your queries. We also know that some of the guys attending this webinar are representing a company. So we suggest everybody to load this webinar on their dealing rooms with a speaker. So anybody and everybody out there, maybe your clients or brokers, can take the full advantage of this webinar. Also, if there are some stockbroking companies which are attending this webinar, we can also conduct these kind of webinars exclusively for those companies, wherein we'll be doing a webinar for exclusively for that particular company. So if any such request is there, you can send the request at our email ID or you can call us at our numbers. Let us start the webinar now. So let me first introduce who we are, what we do, how we guys are trying to shape the financial markets in India, and how we guys are doing a small bit of initiatives towards the investor education. So Edfin, as the name suggests, is education in financial markets, which is a learning solutions company, and we are a financial market training company, wherein we are involved in providing training to investors. The investors could be new investors or existing investors. It could be trader, it could be an intraday jobber or a positional trader, stockbroking employees. So we conduct training for different stockbroking companies wherein we train their employees, we train their investors, we train their sub-brokers, we help the inactive investors to become active again, and all those kind of services we provide to stockbroking companies. We also provide services to the advisory companies wherein their business analysts, senior business analysts, TL, ARM, etc. could be trained. We train sub-brokers, so the sub-brokers are trained and knowledgeable enough to make their clients make profit and do not lose huge money in the markets. Housewife professionals, CA, CS, employees of a bank, a mutual fund company, insurance company. So all in all, anybody and everybody who wants to learn how financial market does, a client who is having huge losses in the markets and want to recover the losses from the markets, or a broking company which wants to train its employees, sub-brokers or investors in the financial markets. So through these kind of webinars, we would like to share that the guys from every part of the world join us. We are having attendees in this webinar who are joining from South, North, Central Zone. We are having clients who are joining us from Dubai, Canada, US. So every employee, everybody is there from every part of the world. So we provide training solution for retail investors, wherein it could be an individual, an HNI, super HNI client, corporate training for stockbroking advisory companies, mutual funds, banks, etc. E-learning modules. So we have e-learning modules wherein companies like stockbroking companies can place their e-learning module and do mass education. So these online initiatives help us to train at a mass at a single point of time. So if you have multi location presence in the country or throughout the world, we can train anybody and everybody without them traveling to a particular seminar place or workshop place. We conduct webinar, we do content development for websites, e-learning, social media, and other training modules. We create market intelligence newsletters and send the newsletters to all the market participants. Now about the webinar. So as you all guys know that this particular webinar will be on commodity market. So why commodity market? So basically if we see the commodity markets, that is the market where a huge chunk of volume, especially the high net worth individuals trade. We know there are traders who trades huge 100 200 lots of gold silver in a single shot, but the irony in India still is that 95% of the traders are making losses in commodity markets. That is very sad, and an irony in the markets that despite having such huge tools like technical analysis, algo trading, etc., why is that the commodity traders are making huge losses? We have met traders who have lost 500 crores even in commodity trading. You will not believe there are traders like this. So in this webinar, we are focusing on training those guys in the commodity market. We hope that our sound is very clear to everybody. So if my sound is clear, you can simply write yes in the chat option and send it to me. Okay, so my sound is going clearly to okay. I got the confirmation. Okay, great, great. Okay, so I got the confirmation that my voice is reaching you. Now let us move ahead. Now topics which we'll be covering, basically basics of commodity. So most of you guys, I believe, are trading already in commodities, but I'll be trading a bit of basics. So if anybody is new to the markets, they'll be getting how commodities are traded in the markets. Fundamental factors affecting the market. So let's say FOMC meet, non-farm payroll data, unemployment data, inventory, unemployment claims, GDP, purchase manager index. So how these fundamental factors affect the commodity markets, we'll be understanding this. Technical analysis. So let's say if we talk about crude oil, let's say if we talk about gold, silver, where is the next support resistance? What is the pattern the gold, silver is making? What is the pattern natural gas is making? What is the pattern commodities are making? Future trend. What is the future trend? Gold, silver, crude oil, etc. And then at the last, we'll be taking all your queries. So we suggest anybody who has queries, do send as much queries you want, and we'll be more than delighted to answer all your queries and all the aspects. So the next few slides would be on basics of commodity. So if you guys are already knowing basics of commodity, just let these slides pass on. So commodity, as you guys know, is the most primitive trading format. We know commodity trading started from the barter system. So straight from the barter system, the commodity trading was being done. Now the commodity is in a digital format, and it is more of a speculative commodity. So if I am right, 99.9% trades on MCX and CDX are speculative based and non-delivery based. Although the the irony of the market is still the regulators say that this is a perfect way to hedge the market, but the irony is nobody is hedging through MCX. 99% trades are done via the speculation. No harm in that. The point is until unless you make money via the speculation, no harm in speculation in the markets. So you guys can do speculation wherein you buy, sell with a stop loss and target, trade in the markets, arbitrage, wherein you buy and sell the same commodity in different expiries or in different markets. Maybe you are doing an arbitrage in spot versus a future market. Hedging, a very good tool, but although the target group, the end user for which this tool was designed is not being addressed. Farmers. Today we are seeing that farmers are suiciding due to the crop loss. Why not government of India? Why not we as a financial market participants? Why not exchanges as a financial market participants open commodity hedging platform at Indian postal banks? Why Indian postal is still used only for postages and maybe now the banks? Why not implement a hedging platform at the Indian postal banks, wherein a farmer can come, simply write a hedging platform via Aadhaar card and do the hedging? This could be a superb idea. SEBI has taken over FMC. Let's see how good SEBI makes the commodity markets. So we as a participant can only participate and help regulators, but the regulators have to take some action. So there are two markets, as you most of you guys must be knowing: MCDX, NCDX, MCX, NCDX. MCX, multi-commodity exchange, basically for bullions, basically for energy and base metals. NCDX mainly for agriculture commodities. MCX 10 a.m. to 11:30 p.m. NCDX 10 a.m. to 5 p.m. FMC is the regulator, and which is being regulated by SEBI now. Types of commodity: four types of commodity: precious metal, which has gold and silver; base metal, five commodities: copper, zinc, aluminum, lead, nickel; crude oil, NG. In energy and agriculture has different commodities like soybean, chana, jeera, cottonseed, turmeric, etc. So to open a commodity trading account, you need to simply go to a registered broker. You can Google a registered broker. You can find 50 to 100 different kind of brokers. Go there, fill a KYC form, give a margin trading, take a basic course in commodity market, and then start trading. I would also like to share a particular idea out here that currently in Indian financial markets, may it be equity, may it be commodity, or may it be currency, why is it that traders, 90% of traders are losing money? Have you ever given a thought why these traders are losing money? Let me give it a thought to you, and I'll leave you guys to think over it. That why don't we in the commodity markets do a make a simple rule that whoever client opens a KYC form has to also go through an online training on equity or commodity, pass a test in equity commodity, and then only his trading will be enabled on the commodity. Believe me, if every investor trader enters his enters the first trades after doing a training, 80% of the traders will start making money. And the inactive pool today, around 75% of the clients on the brokers list are inactive. The major reason is they are making losses in the markets. So if we do training compulsory for every investor via maybe these webinars or via e-learning courses and via online quizzes, today every client is online. There are many tools like Facebook, WhatsApp. Why don't we implement our training via WhatsApp? We have a training on WhatsApp tool also. You can visit our website and you can find our WhatsApp training tool. So wherein we train on via WhatsApp. So why not we implement these tools and put a condition that, okay boss, if that particular client has not passed the training test, he'll not be allowed to trade. You will find some resistance from your employees, from sub-brokers, dealers, RMs, but the long-term result will be superb. Believe me, your clients will simply appreciate you and give you referral trades like anything. No broker in the country is currently doing this. I don't know why. The brokers are not focusing on investor education and only focusing on account opening. What will you do of those accounts who are getting NPA? So this is just a thought from my side. We at the company are highly bullish on and highly motivated to train the guys, and we know that this country is the future in financial markets trading. 10 years from now, we'll be leading the number of Demat accounts, trading accounts, and volumes in trading in the world. So with this thought, let's move forward and let's hope to create a more financially educated society out there. So contract specification: underlying assets. Underlying assets is a commodity or is an asset on which we on which the trading is done. So here underlying asset could be gold, silver, copper, soybean, chana, etc. Trading in lots. So out here you have to trade in minimum lots: gold 100, silver 30, copper 1000. Although government has introduced mini lots wherein you can trade as low as 1 gram of gold, which is 1 gram of gold, which is gold petal, 1 kg of silver, which is silver micra, 250 is the copper mini lot, 10 is the crude mini lot. So why not introduce our equity clients to the commodity via mini lots. Why not train our equity clients towards the commodity so they can hedge their position? You guys must have followed that when equity markets rise, the bullion fall and vice versa. So why not do a proper training to our equity guys so they can learn and earn in the commodity market? Positional short selling, the biggest advantage. So let's say if you talk about, I'm taking a simple example of silver as a commodity. Silver touched almost 38,000. It was 37,900 2 days back. So if I was bearish on silver and if I would have shot silver at 37,900, yesterday the price touched at 36,400, which is, if I'm getting it right, almost a gain of 1,500 odd points. So 1,500 into 30, which makes it 45,000 rupees of profit in one single lot. Although saying is much easier, I know that you all guys must be thinking saying is much easier, when you trade it is much difficult. Agreed. So positional short selling is the biggest advantage in these kind of commodity markets. I'll be shortly coming to trading strategies, because if you guys would also acknowledge that out here there are many clients who are new to the market. So this may be last page of the basics of commodities. So I'll taking the trading strategies in further slides. So you need to pay initial margin, which is 4 to 10% of margin, mark to market margin, which is the notional profit and loss charged on T+1 basis, brokerage, which is charged on intraday and positional trades, almost similar in both, either whether it is intraday or positional. Linkage to the global markets. Now, as you guys must be knowing that MCX commodities are highly linked to the global US UK markets. So the biggest example is FOMC took a decision. So let's say in the December meet, let's say take a call on hiking the interest rates. Gold, silver were down almost 4.5 by 5% since that particular decision. Optional delivery, exchanges provide an option to take the delivery also. Now we are coming to the crux of the whole webinar, how fundamentally you can track the markets, how fundamentally the markets are driven. So let's say first talk about the macros which are there. So some macros are fundamental macros like FOMC decision, GDP, payroll, farm, non-farm data, unemployment claims, etc. We get these macros almost daily. 6 p.m. is the time where most of the macros are launched. Now what these macros are, how these data affect a commodity, what as a trader you should do when you are trading in commodity markets, and how you can use these macros towards your fullest while you are trading in the commodity markets. So let us see on precious metal. So what effect it does on the precious metal. So basically on the precious metal, okay, so basically on the precious metal, the effect which this commodity makes is a inverse kind of effect. So let's say there is a data which says there is a good GDP in US economy or maybe an emerging economy, so the precious metal will fall. So we have seen the example day before yesterday, FOMC said that the economy is going great, let us now increase the interest rates of the economy. All the bullion commodities went down drastically. What on the other side happened was the dollar also risen. So when the dollar rises, these commodities fall because they have to do a balancing effect. So precious commodities has an inverse relationship. So let's say there is a good GDP data or non-farm payroll data is very high as compared to the previous or as compared compared to what was expected. Gold, silver will go down, base metals will rise, and energy would also rise. This is a thumb rule, although every time it could not be true. Let us come to another commodity, which is crude oil. So when you talk about crude oil, there is a peculiar effect on every Wednesday, which is the crude oil inventory. So if the inventory of crude oil is higher than the previous, the crude oil will fall. If it is lower, then the crude oil will rise. There is a simple logic behind this, that if the inventory is higher, the supply would be higher and the price would go down, and vice versa. Again, natural gas, the same fundamental works, which is on Thursday 8 p.m. So if the NG inventory is higher, the NG price would go down and vice versa. USD movement. It has an inverse relationship with all the commodities. If the dollar index rises, you will see a drastic fall in the commodity prices, all the commodity prices which are listed in the country and maybe in different countries. Okay. Uh, we are getting some queries during the webinar, although we highly appreciate getting those queries, but I suggest that please keep those queries on hold. I'll be answering all those queries at the end of the webinar. So I humbly suggest that keep those queries on hold, and we'll be answering all those queries at the end of the webinar. Okay. Shortfall of rain. So let us talk about agriculture commodities. We have seen a huge downward trend when the government of India implemented the quota on keeping the pulses. So the major commodity was chana, which hit lower circuits drastically. Or else if there is a shortfall of rain, so let's say talk about soybean, or let's say talk about sugar. There are talks like that due to lack of rainfall, soybean production would be short this time, and that is why we have seen in past a rise in the price of soybean or maybe sugar. Oversupply is an inverse relationship. So the point is, as a commodity trader, you will have to keep a perfect check on what the fundamentals of those commodities are coming. So if you do not keep a check on the fundamentals of those commodities, you would lose that particular trading edge. Now let us discuss each commodity one by one. So let me first discuss about gold and silver. So if we talk about gold, silver, we have seen drastic correction in last 2 days, especially after the FOMC meet, and when the FOMC decided that let's take a positive call on increasing the interest rate in the December meet. So now the onus lies on FOMC whether it increases the interest rate, what are the GDP, non-farm payroll data, unemployment claims, etc. in the coming weeks, coming months. So that will be a huge blow if the interest rate rises to the bullion market. Global macros, as you all know, are inversely related to the gold. US equities. So let's talk about US equities. The US equities did a best monthly gain in last 4 years. So in last 4 years, this month has given the highest gain, which indicates that the road for the bullions going ahead would not be so easy. So guys, please be aware that we could be seeing a sell on rise on every bullion. So I suggest you guys that keep a very strict stop loss if you are buying a bullion. Although you can buy bullion, the bullions are almost near the oversold region. We'll be showing you technical charts also through Metastock after a few slides. Crude oil. Now crude oil is hovering in the range of 42 to $50 per barrel. We have seen a huge spike in the crude oil price since the inventory day before, and currently trading at 3076 3070 levels in the MCX market, the current contract of crude oil. But still the supply overhang is there. We feel 3200 3230 is a huge resistance for crude oil. You can sell crude oil as much as you want at 200 or 3230, 3250 levels, because it is tend to correct from those particular levels historically. Base metal, as you all know, the Chinese and European economy is going through a very rough phase. Chinese market is going through the worst phase in last 10 years, which was the highest consumer of commodities. So commodity prices are taking a sentimental fall in the markets. Oh, I guess the slides were not moving, so we have now done some technical changes in the slides, so you'll be seeing those slides also. Apologies for that. So base metal, if you talk about base metal, Chinese and European economy are dragging the base metal down. As you all know that Chinese economy is suffering from a huge drawback and huge fallback on every count. So for some time will not be seeing huge uptick in the base metal. But on the another side, if we see that every base metal has come below the cost of production, so producers are taking a huge call whether to stop production for some time. So this will also create a supply overhang and could create a short-term spike. So if you see a short-term 10-15% spike in maybe copper, zinc, aluminum kind of commodities, a sudden spike. So don't be surprised why those spike, because there are chances that some major commodity producing companies could halt their production in coming times. So you can see those surprise spike also. Now natural gas, as you all guys know that natural gas is hitting its near its three-year low, mainly because this rise in the inventory of natural gas, gasoline per se. So we can see some more maybe shortfall in the natural gas, but technically speaking, natural gas has reached its historic support points. So as a long-term trader, if you take a 6 month to 8 month view on commodities, although there are very few out there who take these bigger kind of view, every fall, maybe 5-10% more fall from here could be a maybe a riskier bet, but could be a good bet if you buy those commodities. So now let us move towards the practical technical analysis. I am moving towards the Metastock, which is a technical analysis software, and I'll be taking each commodity one by one, and I'll be explaining what these commodities mean. So let me first take gold as a commodity. So out here in front of you, you are seeing live charts of gold. Let me show you some things, some stuff which is being generated. Let me put a moving average first out there. Let me put a 25-day moving average. Okay. So as you all guys can see out here that this particular commodity has broken below the moving average levels very recently. I'm doing live technical analysis in front of you. So you guys, if you some of you might want to learn some technical analysis, also can learn from these. I hope the charts are clearly visible on your screen. Okay. Okay, so now let me explain what I am trying to say out here. So as you all guys can see that gold is making a lower high, lower top formation. So this is the first high which gold made, and this is the second lower high which the gold has made recently. Out here, as you can see, the gold has broken below the 25-day moving average, which indicates that the medium term outlook on the gold is bearish. So if we talk about the medium term outlook, which means 1 month, at least 2 weeks to 4 weeks, the gold has made a lower top formation. So as you can see, the gold made a first high somewhere at around 27368, and the second immediate high was around 27,190 rupees, and now it is making lower high lower low formation. So gold technically, although is weak, it closed somewhere at around 26,500 rupees on MCX, the current month contract I'm talking about. And if we see any break below 26,320 rupees, we can see gold drastically falling 500 rupees from there. So this is the technical outlook of gold commodity per se. Now let us move towards silver. So as you all guys can see, silver had formed almost a sort of distribution pattern for whole month, for the October month. As you can see, it is encircled out here, and it has given a break below from that particular accumulation distribution move. So silver, as you can see, it is a huge hike here. As you can see, a huge black candle out here, which was made on the day, the next day the FOMC declared that the markets will the interest rate would be hiked. So silver again is showing signs of bearishness after a huge consolidation on the upper level. Currently silver is trading somewhere at around 36,500 the current month. So the resistance level for silver is again 36850. So if it breaks above 36850, we can again see a move of 500 to 700 points on the upside. But if it breaks below 36120 as a support, we can see drastically 1000 point fall from this particular point in time. Let us see crude oil out here. So as you can see, in the crude oil broke a decisive four support point, 1 2 3 4. So there was a four support point which the crude break, it went down, and now it is again above the medium term trend channels. Let me show you a trend line, how a trend line works. So if I draw a trend line something like this, so the trend line gave a buy signal on a short term somewhere out here. So this was the level. The level is somewhere at around 2895 or 2900. The breakup was on 28th of October, and the commodity price moved above. Now if we talk about the current scenario, the commodity is at its huge resistance point, which is somewhere at around 3080 3090 level. So I think that at around 3090 level, the crude oil will face huge resistance and could see a shortfall, can see a downfall if it does not moves above that 3090 levels. If it moves above and closes above 3107 level, it will see a huge bounce back till 3200 3250 levels. Now let us talk about natural gas. So as you can see, natural gas touched almost a level of somewhere around 127 on 27th of October, and then it gave a bounce back because there was an inventory and the commodity checked. There was a check on commodity, so it gave a bounce back. Again, as you can see, the natural gas is falling again. If you talk about moving average, let me show you what the moving average is saying. Let me put again a 35-day moving average out here. So as you can see, 35-day moving average is much upper from this particular level. Let us put a 7-day moving average. Okay. So again, as you can see, 7-day moving average lies somewhere near 152 levels, and if the commodity breaks below the 152 level, we can see a huge breakdown from the level from the natural gas level from here. So natural gas all in all is bearish for the short term, but for a long term trader, these levels of around 120 is highly bullish if you want to take a long term bet in the natural gas. So let me put a candlestick chart also. Okay, so this is the candlestick chart which simply shows there was a huge gap up. So this is the gap up which was created. So there is a gap theory in the market that every gap gets fills. So we can see some downward trend in the natural gas price also, which can be seen as a gap filling activity. Let us take the last commodity, which is copper. I'm taking those commodities which are most frequently traded in the markets. So if you talk about copper as a commodity, let me put up some technical indicators out here. So what we have done is we have put a RSI and a fast stochastic. Let me show this to you. Okay, so this one is the RSI. Let me write what suggest. So I am writing what suggests what. Please pardon my spellings if I'm making some spelling mistakes. Okay. So as you can see, copper as a commodity is near its multiple support level. Let me show you the supports also. So the support line currently stands at 336 and the last closing was 336.55. So if this particular level is taken down and if we close below 336 or if 335.50, you can see huge downward movement, maybe for 5-10 points with a immediate 5-10 points downward trend in the copper if this level is broken. But on the other side, I'm seeing a sign of so-called consolidation at the lower end in the stochastic oscillator. On the RSI, the currently RSI is at 40 level, which is near the 30, which is the oversold region on the RSI. So all in all, if this 336 level is not breached, and if it breaks above this level, we can see huge uptick from here. So this was a short technical analysis session which we took, and now we'll be moving again towards our slides, and we are towards almost at the end of the webinar. Let us discuss some do's and don'ts for the commodity trading. Never over leverage your trade. So the first principle says that never over leverage your trade. So there are many clients, there are many sub brokers, there are many dealers out here who are listening to this particular webinar. There are clients who come to us and say us that, okay sir, the biggest problem is our broker does not give us the limit, how as a financial trainer advise us what we should do. So I say only one thing: if the broker is not giving you limit, he is doing very good for you, because if you take huge limit, if you take huge over leverage trades, 90% of over leverage trades result into losses. So ideally you should not take leverage position more than 4 to 5 times of your base margin or base capital which you have. Do not try to carry overnight position, specifically in internationally driven commodities. Best example is silver. Somewhere trading at around 37,800, 900 rupees day before yesterday, before the FOMC meet. Next day it was down 900 points. Best example, I suggest everybody who is trading in MCX never take overnight position in the markets, because these are internationally driven commodities. You don't know what the Sam uncle, which means the US government, says when you are sleeping. So never average a loss trade. If you are in a loss trade, ideally they say that exit in stop loss. But if you are a pure intraday trader, never average a loss trade, because you will be missing out a better opportunity somewhere else in the markets. Keep a very strict stop loss while you are trading. Biggest mistake the traders do. They do not believe in keeping stop losses. I've seen traders who are making losses and who are rolling over their positions in gold, silver with 2 to 3,000 rupees losses. I don't know why they are doing this. I don't know what they want to prove to the markets, but that is simply wrong. Do not avoid stop losses. If the stop losses are coming, keep a stop loss. Let me take another example how you can use stop loss with profits. You all must be relating stop loss with only losses, but let me show you how stop loss can make you profits. Let me take a very simple example. Let's say you have bought a commodity or a share at 100 rupees, kept a stop loss at 97, the target is 110 rupees, right? Bought at 100, stop loss 97, target 110. The stock price from 100 rupees rose to 105 rupees. What to do? Book profit or exit? Do nothing. Simply trail your stop loss from 97 to 102 rupees. If the market goes up, trail your stop loss up. If the market goes down, you will be exiting at 102, profit of 2 rupees. Next 1 hour, price move from 105 to 110. Do nothing, trail your stop loss again to 107 rupees. Now, if you would have exited at 105, you would have not able to take the profit of 107. So with the trailing stop loss strategy, you can take the fullest advantage of the fullest movement of any commodity or stock. So if any sub broker dealers are attending this particular webinar, trailing stop loss strategy is the fantastic and the best strategy and best gift you can give to your clients. Always use trailing stop loss strategy in the trades. I've advised any and every client which comes to me to use trailing stop loss. Do not shy away from selling also. There are traders who always buy. I don't know why in commodity market you always need to buy. Go out if you're feeling that the commodity is going down, short sell the commodity. Do not shy away from selling the commodity. Always carry some extra fund if you need to average or trend the indicates. Do not commit 100% of your funds. I'm talking about 100%. There are clients who commit 200% of the funds. Now you'll ask how 200%, they fight with the brokers literally for getting the limit. That is the biggest mistake they do. So this was a short webinar on how you can trade in commodities, the current technical analysis in commodity, do's and don'ts in commodity. And now we are moving towards the end of the webinar. We'll be introducing some of the things which we do. So basically, as you know, we have some online courses in different streams. We have an online course, which means that everybody from any part of the world can learn online stock markets the way you have learned commodities now. We have courses in basics of stock market. So if you have a new client who has just joined your broking house, or who has just joined, who has just opened this KYC, we suggest every client to go through our basics of stock market course. Because if you don't know which kind of war you are getting into, or which kind of jungle you are entering into, how can you trade in the markets? So in the basics of stock market, we teach everything about IPO, stop loss trade, order trade, market trade, averaging, trading and clear, trading and settlement, T plus 2, T plus 1, everything about what a basic of stock market should be. Intraday, short selling, everything. Decoding future trading. This course is all about futures market. How equity futures could be traded, what is lot size, margin money, M2M, short selling, rollover, open interest, cost of carry, everything about future trading online. Options trading, call, put, premium, American, European, in the money, out of the money, at the money, exercising an option, booking profit in an option, how the premium price is being calculated. Commodity trading, basics of all commodities, most of that is covered in this webinar also. Lot size, precious metal, tracking forexfactory.com, how you can track the major macros of the market, currency market, USD, Euro, GBP, JPY, all these commodities. Technical analysis is a fantastic course which we suggest every dealer. Now, what we are trying to implement in India is that why not every dealer, every relationship manager learn technical analysis? Don't we want our relationship manager to be wealth advisors also? We only want our dealers to punch the orders. We only want our branch manager to punch the orders. No. Everybody in the market should learn technical. It is so easy. You guys have seen practical of technical analysis of Metastock in this webinar. So this course help learn everybody and anybody practical technical analysis. We teach technical analysis on complete Indian markets. Nifty, Bank Nifty, Reliance, Infosys, gold, silver, crude, everything. Advanced course on option strategies, bear spread, bull spread, straddle, strangle, butterfly. Mutual funds, what are mutual funds? SIP, how you can invest in online, the online NSE, BSE platform of mutual funds, liquid funds. So let me give you an idea, you guys out here, that currently if you talk about a big broking house, they have around 10 lakh, 15 lakh clients with them. Not more than 2 lakh clients or not more than 1 lakh clients trade mutual fund through them. Point number one, clients don't know that the broker provides mutual fund. Point number two, the employees are not trained enough what mutual fund is all about. You ask any dealer what is a liquid fund, what is the NAV calculation, what is the cutoff time for investing in a liquid fund. 9 out of 10 dealers or relationship managers don't know what a liquid fund is. In fact, liquid fund is the biggest tool which can help you guys to make the advantage of your ideal money. So these are 7 8 courses we have for anybody, everybody, maybe employees, sub broker or investors who want to learn. You can simply call us on our numbers. You can visit the websites to see these courses. This is a WhatsApp number which we have. So if clients have any queries, any suggestion, they can simply add our number on WhatsApp and we'll be more than happy to answer the queries. These are some connectors. We are present on Facebook. We have all these videos. You will find this video on YouTube at around 1 p.m. The whole webinar video will be available on YouTube. Simply go to youtube.com/edfin. You will find this and all our past webinar videos. We have conducted webinars on options, technical analysis, basics of stock market, mutual fund. All the videos you can find on our YouTube channel. We can share these videos to your investors. You can help them educate also. So now we'll be taking your queries. The forum is fully open to all you guys. You want to ask any queries, simply send the queries in the chat option and we'll be answering your queries. So if you have any queries, you can feel free to ask us the queries. Also, as I shared in the initial comment of my webinar, so if there is a company, stockbroking company, who wants to conduct free of cost webinar for their employees, an exclusive webinar for only that particular company, we conduct these webinars free of cost initially for you guys. So if you want to conduct the webinar specifically for your employees, sub brokers, do send us a mail on info@edfin.co.in, and we'll be more than happy to uh, answer those, and so take those queries, and we'll be conducting those webinars. So let us start taking the queries. We are getting many queries, and we are happy to answer all those queries. So let us start taking the queries now. Okay. Okay, so the first query which came earlier was something about the crude oil inventory. So the crude oil inventory come in barrels, million barrels. So when the inventory is higher than the previous inventory, the price will fall, and vice versa. How you can get the data of crude oil inventory? Simply visit forexfactory.com. There is a calendar. You can get all the real-time data on the inventory. Okay, so there is another query from from one of our NRI clients. So can people outside India can invest in the commodity markets? Yes, if you are a resident of India, whenever you come to India, go to any sub broker or go to any broker, fill a KYC form, get the online trading form, trade from anywhere in the world. There is another query that do you have any clients who have made profit out of your strategy? If I say yes, I don't know whether you'll believe it or not, but simple is you try to implement those strategies while you are trading, and do let me know after 10 days whether you made money or not. Okay, another query is how do we make a lakh of rupees when you suggest that you are not trading in positional trading? So if you want to make lakhs, first try to make thousands, and sorry, use technical analysis, learn technical analysis, and try to see how technical analysis is helping you in making money. First try to make thousands, and then definitely you will be making lakh rupees. Okay, what is the best method to get support resistances? So the best method to use support resistance is moving average. So simply plot a moving average. So let's say you want to see the medium term or short term support resistance. Simply go to moving average tab, use 7-day, 14-day, 35-day and 50-day moving average. So this will show you the whole range of support and resistance. Okay, so there is a superly interesting question and a practical question. Why is it that sometimes the price do not follow the market data? Fantastic question, and believe me, 100 out of 100 of the clients or of the students we train or ask these queries. So these commodities are always not driven by those datas. It is also driven by the domestic reasons. It is also driven by the equity markets. It is also driven by the dollar USD index or dollar currency parity. Always you will not find that the data play out, but in a longer term or a medium term, data do play out. So what time the NG inventory comes out? If I'm getting it right, Thursday 8 p.m. or around 8:30 p.m. You can see it forexfactory.com. It comes out. So our WhatsApp number, as I already showed you, is the same contact us number which you have got in the email. Silver, the query on silver. So if we see silver moving above 37,000, 36,800, go long. If it moves below 36,220, go short. To see technical analysis live, you can simply visit investing.com. It's a great site. You can see live charts. Next 3 to 4 months outlook about crude. Whenever it comes to $50, I'm talking about uh, the COMEX price or the Brent crude price. Short crude oil. Simply short the crude oil whenever it comes to $50. I don't see crude oil going above $50 or sustaining above $50. How to track dollar index? Tens and thousands of sites online. Simply Google dollar index, you'll get. Commodity inventory and data, investing.com, US site, superb site. Simply go to investing.com, great site. Okay, so you want again which moving average to be used? 7 day, 14, 35 and 50-day moving average. Do you think manipulation prevents in the market? Well, I'll not go towards market manipulation or that. It may be, it may be not. I'll only stick to my technical analysis and that's it. Okay, there is a question from a client. He's long in gold from 30,000. What to do? Sir, sadly, you are long in gold from a very bad level. I would suggest, and although I not suggest you to book profit because I know that you cannot take that much pain out here. You can do short-term trading whenever gold touches a bottom. If you use RSI, whenever gold touches RSI of 30, buy gold. Whenever it increases 500,000 points, sell gold. So this way you can average out your price. Okay, so to start with, for a trader, which is the best place to enter? You should enter via gold, maybe mini, gold mini, or gold petal, if you can go on. So equity or commodity, which will give you better return in next 3 to 6 months, both will give you fantastic returns, sir. If you know how to know the trend of the markets. If you know technical analysis, both market could be good. Can we buy crude for positional? Not here. If the crude touches again 2800 or 2750 levels, you can buy for a positional levels. What are good EMA for intraday trading? Again, EMA 7 day, 21 day and 50-day EMA exponential moving average are good for intraday trading. Okay, and there is a question and a good practical question that many television channels says that the gold will fall down to 20,011. Even gold much fell down to. What do you suggest? I will not take such a huge call, but 22,000 is a huge support for gold. I don't think in the medium term it will fall below 22,000. If FOMC increases interest rate by 50 basis point, you can see any level in the gold on the downside. So if you have any further queries, we'll be more than happy to answer. Another query is what is the fees for your service calls? You can simply call us on the number after the webinar, or you can simply WhatsApp or mail us and we'll be more than happy to answer all the fees. You can find all the fees on our website also. If you want to personally chat with me, you can call on my number and I'll be more than happy to answer your queries. Okay, so once we join the course, can we mentoring support? Yes, once you join the course, you'll get complete mentoring support. Whatever queries you have, whatever questions you want to ask, you'll get complete support once you join the courses. Okay, they want me to repeat the EMA. EMA for intraday, 7-day, 21-day, and 35-day EMA. So if you guys have any further queries also, you can WhatsApp us, call us on the same number, you can mail us, you can connect us on the Facebook. So if you have any further queries, we can feel free to ask, or we'll be ending the webinar now. So as I see, there are no further queries. This was Ashish Andani taking the webinars. You can find my videos also on my YouTube channel, and you can ask me any queries if you have via any of our tools which are available, and we'll be more than happy to answer your queries. Thanks everybody for attending. If you want to have an exclusive webinar for your team, for your company, feel free to call me on my number. We'll be happy to give you free webinars for your companies. Thanks everybody for attending. Thank you. Have a nice day.